Hi, everybody. This is Alan Ellman, the Blue Collar Investor, welcoming you to another one of our sample trade videos. This one is a real life example with Royal Gold Inc. listed on the NASDAQ exchange under the ticker RGLD. Now, this is a trade that I initiated about a week ago on November 24th, 25, expiring in 3 weeks, 12/19/25. Today is November 29th, 2025. Now, this is a two-contract defensive, modest implied volatility, 26-day trade with using cash secured puts. So a defensive trade. Now, I've been doing mostly defensive trades this year. My concern regarding the economy, and this particular one also had mixed technicals from a price chart perspective. So I was motivated to do a defensive trade. Again, my portfolios consist of between 100 and 150 contracts each month. This is just two of them. Okay, so why did I select Royal Gold? Well, you could see in the brown row in the bottom of the screenshot the stock which was taken from our weekly stock screen and watch list. And you'll notice that I have a red arrow next to the ticker. That shows that that ticker is not in bold. That means that the technicals were not all bullish, that there were mixed technicals. That would be another reason to favor more of a defensive posture. If it's in bold, that means every single one of our technical indicators were bullish. I'll show you in a little bit why this one was mixed. Still, it's an elite performer from just about every other perspective. Now, where did this come from? The IBD Big Cap 20 was number 20 on that. These are the top rated large cap growth stocks. So being in that list alone is a hugely bullish signal. Now it's in the mining industry, currently ranked A, and it was ranked A last week as well. Another bullish signal. You'll notice the mean analyst rating on MAR is 1.54, which is outstanding since 1 is the best and 5 is the worst. So we're good to go there. As far as the on-balance volume, up arrow means more cash flowing in on up days than on down days, another bullish signal. And if we move all the way over to the column that says approximate current at the money implied volatility, 36%, about double that of the S&P 500 when I entered this particular trade. The option liquidity was adequate. You see the Y for yes. And both the earnings and the ex-dividend dates did not interfere with this particular trade. So that's the reason why I chose this as two of the contracts for my current portfolios. Now, let's look at a comparison chart of Royal Gold compared to the S&P 500 over the last month. Now, you could see that where I have this black oval over here, we had a bullish crossover around November the 10th, somewhere in that neighborhood. It crossed over and it's remained above the S&P since then. So again, the S&P 500, this blue line, has kind of been consolidating a little bit to the downside. And after this big bump up, Royal Gold also has been consolidating. So is it immensely way above that of the S&P 500 in the last month? No, but it's above. So once again, the kind of stock or ETF that I would usually take more of a defensive posture if I'm concerned about the overall economy, which I currently am. Now, this is a more involved technical chart. So let's go through that. First of all, looking at the broken red arrow, we could see over the last year, there's no question that Royal Gold has been appreciating in value. Now, if we look at the exponential moving averages, the blue line is the shorter term 20-day EMA. The red line is the longer term. You always want the blue line above the red line, which it is. Obviously, Royal Gold has had a bunch of whipsaws, and, you have to have the stomach for that kind of thing. Currently, it's the blue line, the shorter term, is above the red line, bullish. The price bars are at or above the shorter term EMA, bullish. So overall, number one, trend bullish. Number two, the MACD histogram, which identifies both trend and momentum. These blue bars are above zero, a bullish signal. Now here comes the mixed part. The number three, the stochastic oscillator, which is this black line over here. It was trending up for a while, but then all of a sudden it dipped down below the 80th percentile. That, folks, is a mildly bearish signal. So I'm going to consider this a bearish signal in 1 and 2 bullish, and that's why it's mixed. How about volume? Well, the volume's holding up, meaning that the other signals are meaningful. Overall, if we took a look at this in 3 seconds, I would go mixed technical chart, which would lead me to more of a defensive posture in a market that I'm concerned about. If the market was raging bullish, I would probably ignore that stochastic oscillator and go with a more aggressive position with this stock. But because I'm concerned about the market as well, I'm going to take a more defensive posture, which is what I did. Now, looking at the option chain on November 24th, when I entered this trade, World Gold was trading at 188.72, and I went deep out of the money to the 175 put. 26-day expiration, expires in 3 weeks on 12/19, and that had a bid price of $2.20. Now, I'm selling 2 contracts, meaning 200 shares of obligation to purchase, so I generated $440 into the cash account. Now, what about protection to break even? Well, we won't lose a penny unless Royal Gold drops by more than 8.44% by 12/19. As you'll see in a moment, it's been heading to the moon of late. So extremely deep out of the money puts, which means much lower than current market value, can offer significant initial returns. You'll see it in the next slide, with considerable protection to the downside as well. So here's our trade management calculator, TMC. We enter the trade in the top section over here. It's actually left to right, but you see it better if I piggyback on the top of the entry and the initial calculations. You can see that Royal Gold was trading at 188.72, the 175 put 220, 200 shares of contract obligation. Now, the spreadsheet tells us, bottom row, circled in red, if taken through contract expiration, we're looking at a 26-day trade. What about break even? Well, the break even price point, put strike minus put premium, is 172.80. Remember, Royal Gold was trading at 188.72. That's how far it would have to drop below 172.80 before we start losing even a penny. So what happens if it does and shares are put to us at 172.80? Well, in the purple cell, it tells us that we purchased Royal Gold at a discount of 8.44% from the price when the trade was first executed. The brown cells give us our initial returns, 1.27%, and based on a 26-day trade, that annualizes out to almost 18%. Those are the two outcomes, an annualized return of nearly 18%, or purchase the security at a discount of 8.44%. Those are the only two outcomes. Here's a broker statement showing the confirmation of the trade for the 2 contracts and the $440 that was entered and into my cash account. Now, the spreadsheet, TMC, will also give us our total portfolio returns. I'm just using these 2 to show you the 2 contracts showing the 1.27%, which based on the 26-day trade comes out to 17.87%. But if you had like 20 different positions, the spreadsheet will calculate that out for you. Here we are, Saturday, November 29th, rather, 2025. Welcome, everybody. Let's see where we stand on this Saturday morning. On a light volume holiday week, Thanksgiving, the market went up nicely, 4%. It's not that meaningful on a light volume week, but it is what it is, and the market did go up. Now, RGLV went past the moon. It was heading to Mars. It went up to $203.84. That means it went up $15.12 above the price when I first entered the trade. It's above the put strike by $28.84, and it's above the break-even price point by $31.04. So to start losing money in the next 3 weeks, it would have to drop down by more than $31.04. If it doesn't, I will have made money. And before it would be exercised, it would have to drop down, will be subject to exercise to 28.84. So significant returns can be generated even with a 26-day defensive cash secured put trade. And we can align these trades based on what's going on in the market today and our personal risk tolerance. Also, as you saw earlier, by the chart technicals, is it all bullish or is it mixed? If it was all bearish, we wouldn't even consider it. Right now, in the case of RGLD, well, a significant return was initially captured, and the trade status is looking very good with 3 more weeks until expiration. I do not take anything for granted, so I'm always ready with my exit strategies if the trade turns against us. But what if it keeps going up? What if RGLD continues going up? I am looking at this very carefully for possibly rolling up that strike and generate another income stream. I'm very close to it now. We'll see what happens when the market opens on Monday. If it keeps going up, I am prepared to roll up that 175 put strike. Always remember, folks, these are low risk trades. They are not no risk trades. Now, if you go to our website, thebluecollarinvestor.com, you see the link at the bottom, and go to our free training section. You can download the covered call writing or cash secured put free beginners tutorial. And I have a link for you here where you can get our free ebook, which goes step by step with the video series. It's an overview of those two strategies, and the free ebook will also go along with these video tutorials. So feel free to take advantage of these free resources. Okay, ladies and gentlemen, that ends another one of our sample trade videos, this one with Royal Gold Inc., which is a 2-contract defensive modest IV 26-day cash secured put trade taken from our weekly stock screen and watch list for our premium members. Folks, I hope you enjoyed this video presentation, but most importantly, I hope you benefit from it. As always, this is Alan Ellman, the Blue Collar Investor. Take care, everybody.